Welcome back to Bazaar Morning Call. It's a crackling last day of this Samvat. In fact, look at the Nifty now up almost about 80 odd points, and plenty of stocks are moving around very well this morning. So just a couple of stocks on our radar today. KPIT Technologies, ever since they raised their revenue guidance, has been surging, and now that stock is up 4.5% and on pretty good volumes as well this morning. After that, a lot of these FMCG names hitting fresh 52-week highs. ITC, of course, is at a fresh 52-week high, but apart from that as well, you have names like Nestle, Page Industries, both at fresh 52-week highs this morning. You saw the chart of L&T Finance that came before that. Post L&T Finance's numbers, the stock has been soaring, and this morning as well, both on the price as well as the volume charts, the stock is looking good. And finally, we have Polycab, which is very close to its 52-week high of around 2860 or so. That company as well, since the numbers and the management speak, that stock has been on an uptrending trajectory. In fact, not just today, but if you pull up a one-month chart, you'll notice that it's seen a significant pickup. But getting back to the big story, which is the movement in the banks, we spoke to the management of Canara Bank, who said that the corporate and the retail loan growth has been very strong, and that's something that will continue. Next on our radar is Union Bank. After the Q2 earnings, the loan growth has picked up. Lower provisions have aided the profit, but the company has also seen massive write-offs in this quarter. We have the management joining in. Miss A. Mani Mekhalai, who is the MD and CEO of Union Bank, is with us on the show. Miss Mani Mekhalai, happy Diwali to you, and thank you so much for joining us on CNBC-TV18. Do you also believe that loan growth will continue to be very strong for the industry as a whole? And for Union Bank particularly, what are you targeting?
Yeah, good morning and happy Diwali to you also. We have got a very robust growth in loan book for the current quarter and the previous quarter also. We have shown a loan growth of almost 21%, 21.92% growth. Even our growth in RAM book was also very, very, robust. We did about 14 plus in the retail. Agriculture also, we did about 14.19%. MSME grew by almost 15%. We are anticipating a good growth in all the sectors of RAM and even the corporate book also. Presently, what we can see is we have got an unavailed book of almost like 21,000 crores. So going forward also, our loan book is going to be very strong.
Okay, all right, ma'am, noted that point. Then if you could give us a sense about your NIMs, what's the outlook on that front? And also if you could tell us about the asset quality, any kind of guidance for the coming year?
Yeah, the guidance for NIM, of course, was at 3%, but we have grown at, it is about 3.15% for the current quarter. We will be surely keeping the NIM at 3%. And with regard to asset quality, as my guidance was, 13,000 crores of slippages and 15,000 crores of recovery for the year. As of now, we have done about 8,900 crores of recovery, and slippages have been at around 6,416 as on date. We have done good recovery in cash recovery. We have done upgradations. We have also done recovery in the TW accounts. We have got aided by the OTS. We have got almost like 80,000 accounts where OSDL was done, that is below 5 crores, and to the tune of about 1,300 crores of OSDL was also done during the current quarter. And I would like to tell that my slippages will be in and around 13,000 crores, and the recovery would be to the tune of about 15,000 crores for the year FY23.
Ma'am, in terms of just underwriting, right? I mean, our colleague researcher Abhishek points out that in the last 14 quarters, if you take a look at the total slippages and total write-offs, I mean, the write-offs are about 100% of slippages. So, is that trend likely to continue? What can you do to kind of improve this? Because the book is also growing.
Yeah, write-offs for the FY22 was about 18,000 crores, and for the current year up to now, we have done 15,000 crores. It doesn't mean that we are not recovering from the write-off book. If you see that the recovery in the written-off accounts were to the tune of about 1,700 crores for the current quarter also. So we are going on we will be recovering from the written-off accounts also. It's not that they are written off from the books of the bank. It still is there, and we are recovering substantial amount out of that.
So what are the numbers? I'm sorry, I didn't get that. What will the write-offs be going forward on an average?
We will be keeping it to close to about 18,000 crores, what we did for the last year, and the same amount will be continuing for the current year also. In the return of accounts for the half year ended 2023, we have done about close to 2,900 crores recovery in the return of books.
Okay. All right, ma'am, just coming back to the loan growth part, you're saying that you're confident about it, but I don't think you gave us a number. If you could give us a broad range on that front, and where do you expect maximum of this loan growth to come from?
The guidance for the bank is, 10 to 12% growth in the loan book. We have done in the present quarter, 21.92% growth in the advances sector. This is because, in September 21, the books did not grow to that extent. So we are seeing a very huge jump in the growth percentage to about 21.92%. The growth is equally coming from the RAM and the corporate structure, actually. The RAM sector, all the three parameters, like if you take retail, agriculture, and MSME, there was a double-digit growth. Almost all of them grew by more than 14%. Retail grew by about 14.45%. Agriculture grew by 15%. MSME has grown by 15%. Education loan has grown by 8%. Gold loan has grown by almost 30%. So I'm anticipating and looking at the growth numbers in all parameters.
Sure. Ms. Mani Mekalai, thanks a lot for joining in, and all the best with the growth for the bank. That's Union Bank of India. By the way, the stock of the moment right now is KPIT Technologies. It's soaring. It's up almost about 8%. And remember, we were telling you about how the organic growth guidance has been increased to 23% versus 18 to 21% earlier. Definitely, I think there was a guest earlier telling us about how IT is now the non-consensus trade. But a lot of people are perhaps looking to buy into it.
Yeah.
Sandeep was telling us.
Just one more point. Yesterday, we had KPIT when they joined us on the show. A few years ago, their margins were around 11-12%. That's gradually been moving to around 18%. And we probed them whether 20% or not is on the cards. And he said in the coming few years, that's possible. Yeah. So after you have such a big, 500, 600 basis points improvement in margins, and then you're guiding for good growth, and to top it up with margins of around 20% for a company that was doing only around 12%, I think, Prashant, you made the point, right? The stock has moved from 80 rupees odd to around that 700 rupees odd. But I think business on the whole for them is evolving. Yeah. It's trading at a bit of a discount in comparison to its larger peer, that's Tata Elxsi, which was very, very expensive. It's not cheaper by any stretch of imagination, but it seems the street believes that it's got the levers, and that's why they're bidding up the stock. That's why I think KPIT, that was a few days ago 610 rupees, is at around 700 rupees.
I mean, that's a very large move. Sonia, just a couple of names which are moving around. I just want you to put up IndusInd Bank. You don't, this is not pre-positioning coming off. I mean, the street is clearly worried about something, and the numbers were largely okay, except that point I was making about liabilities. Savings accounts, which were down about 6% quarter on quarter. I mean, it was down sharply yesterday. 5% is down another 1.5%. So that is IndusInd. The other one, of course, is Delivery, which is down another 11% today, 421. So that's after yesterday's big cut. And look at Max Financial Services. That reported numbers, there is a little bit of uncertainty. This is our story. CNBC-TV18 exclusive on the Axis Max deal. And our colleague Yash did pose that question to the Axis management on whether the second leg of the transaction will go through at, the earlier prices, or that will have to be revised. The stock is down about 3.5% on that one as well. So it's just a few names which are starting to move a little bit more. Overall, on the index, there's not too much by way of trouble. We are up about, 65 odd points or so. But let's keep it with the financials, and let's talk about Shriram Transport Finance, which has actually done very well. Seller showing from the company in the second quarter. The company has clocked in its highest ever quarterly disbursements, and net interest margins have expanded to 11-quarter high. And now we're joined by Umesh Revankar, Vice Chairman and Managing Director at the company. Umesh, great to have you with us here. Thank you very much for your time. Season's greetings from all of us here. Happy Diwali to everyone there. Appreciate you joining in. You witnessed your highest quarterly dispersals. Can this be maintained? Can this pace be maintained in the coming quarters as well? What are you seeing in this quarter so far? Or rather, what have you seen?
Yeah, thank you. Wish you a happy Diwali for everyone. Basically, the demand, credit demand, and also the vehicle demand, both are increasing. I believe the infrastructure is leading here, because the infrastructure activity, infrastructure spend is creating a bigger demand. The construction equipment and construction vehicles, both are in good demand. Plus, the also is adding the rural economy, even though there were a disturbed monsoon. The monsoon got delayed in northern belt, UP, Bihar, and MP. But the late rains has given a comfort and assurance. So I think demand is from everywhere, both urban and rural. And the infrastructure is definitely leading the credit demand overall. So we believe this will be maintained for next couple of quarters. And this year we should see all-time high disbursement from our side.
Right. Do you want to put a number to that, Mr. Revankar? You know, normally you were doing dispersals of around 15,000 crores. That's gone to around 17 to around 18,000 crores odd. So you're expecting to maintain that sort of a run rate? And also, what about the margins that you make? Input costs are going up, and cost of borrowing is going up. What is the steady state number we should look at from here on?
See, if you look at our net interest margin, it is improved by 7 basis points over the previous quarter. So we are able to maintain our net interest margin in spite of increased the borrowing cost. We also have high liquidity. So that itself gives us headroom for improving. By reducing our liquidity, we can improve our net interest margin further. That is the scope we have. And we are able to increase our lending rate because our customers are loyal customers, and also we have a niche presence in our segment. We are able to pass it on to our customers. So the up to 10 basis point, we can always manage increased liability cost. We can be managed. And also our liability book, if you look at, nearly 80% of our liability book is fixed. It is not floating. So immediately it doesn't get translated into increased cost to us in our book. So these are all helping us, and we should be able to maintain 7% net interest margin for the next 2 quarters also.
7% you said, right?
Pardon?
What did you say? How much will you maintain it at?
7%.
7%. All right, got that. Mr. Revankar, good morning. This is Sonia here, and happy Diwali to you. You know, one thing I noticed is after many quarters, the disbursement of new commercial vehicles had gone up. For the longest time, it was just pre-owned commercial vehicles that were being disbursed. Is this a sign of a genuine pickup in the infrastructure activity? Because this is something we've not seen for a long time. And what kind of growth do you see between pre-owned and new commercial vehicles? What could the sustainable growth be?
See, basically, what happens is we acquire a customer for used vehicle, and some of them upgrade to buy a new vehicle, depending upon the economic environment and the cash flow expected. So right now, the cash flows are good for the customers. The freight rates are good. They're able to make good income out of their vehicles. So some of them are upgrading. In fact, the upgrade got delayed in last 2 years because the vehicle price went up by 25%, and that got delayed. And now people are upgrading their vehicle to new. So we are not targeting new customer per se, but our existing customer getting upgraded and buying new vehicle, and that's happening. The confidence in the people in buying new vehicle, which is almost double the cost of used vehicle, and the ability to pay higher EMI, that is increasing. So we do see bigger demand, and definitely, yes, the infrastructure spend and infrastructure activities are creating that kind of a demand. Even the real estate is doing quite well. So all these things are helping people to upgrade to a new vehicle. And we can certainly see in our book, some of our customers moving and buying a new vehicle. So there, it may not tilt our book totally towards new, because it is now 90-10, and it will definitely remain at that level. But used vehicle demand is also equally good.
Sure. Sure. And that's important, the point you're making, that, you know, the confidence to buy a new vehicle has gone up. That's the kind of demand traction that we're seeing, right, in commercial vehicles. But do you think that this higher inflation, higher interest rates are something that could dampen the growth going forward, or you don't think that would be too much of a problem?
I don't think interest rate will have a big challenge, because interest rate increase of 100 basis point will make a small difference. I don't think it will not a big difference on customer, because as long as the market is good, economy is booming, the customer is able to pass it on. So a customer it all depends upon the economic activity, whether he'll be able to have increased income and able to repay his EMI. That's very important. So the increased cost of acquisition definitely delayed people buying new vehicle. But now it is getting adjusted, because after nearly one and a half years of increased price, now it is getting stabilized. It is not going, the vehicle prices are not further going up in the last 2-3 quarters.
All right. Mr. Evankar, thank you very much for joining us. Appreciate you being here on the program today with that perspective. Well, the market's up 72 points at 17,635. I mean, it's pretty good going. Just a quick look at sectors which are doing the best. It's, of course, has to be banks. PSU banks are up another 1.8%. So if we end with these kind of gains, it's going to be 11% Friday on Friday gain for the Nifty PSU Bank Index. Bank Nifty is following closely behind, because private sector banks like Axis are participating as well. So, I mean, PSUs, Bank Nifty, private bank, I mean, it's all financials really, which is doing the bulk of the heavy lifting. The FMCG index is up 0.5%. That continues from yesterday. The FMCG index did well. Small caps are up about, the index itself is up 0.5%. Broader market, of course, there's a fair bit of traction. Advances to declines is about 2:1. Sonia.
Did you also notice that VIP is gaining, Zomato is gaining, United Brewery? So people are shopping, they're traveling, they're ordering. It's a festive season,
and
right?
guzzling beers. Or looking forward to guzzling beers.
Later in the evening.
Prashant.
Right?
Focus, Nigel is focused.
1 point agenda. But why not, right? I mean, come on, there's a long weekend coming up, guys. Let's slip into a quick break. On the other side, we will connect with Mitesh Thakkar. The market is in fine fettle, charging like a rocket.
Welcome back. Well, it's a good-looking screen. The Nifty is up close to around 71 points. And I'll tell you what, with the moves that we've had in the last few days, the Nifty actually was down 4-5% from last summer to this one. Well, we're almost going to break into the green on a year-to-year basis. So that's pretty good news. But plenty of stocks are moving from the broader markets, and there is traction on quite a few stocks. But let's start off with a couple of losers first. Emphasis, that stock is getting clonked back post its number. So it's down close to around 4% the last time I checked. Max Financial as well. Yesterday on the con call, the management reiterated that everything's in place and the deal is going ahead. Well, for the time being, though, the street is appearing a little bit nervous. It's down close to around 4.5%. But there are some big gainers, and a couple of management joined us earlier today. And you have the stocks reacting as well. Canara Bank, the management sounded very, very confident. Mr. Prabhakar said loan growth is going to be good, NIMs are going to be good, asset quality is going to improve as well. It's up 3.5%, building onto yesterday's gains. And Dixon, they scaled back their guidance a little bit, but otherwise it's sounding pretty confident about 15,000 crores of revenues in the coming year. So that stock is well doing well. But otherwise, they're from the broader market. Some of those lesser known names or lesser talked about names, well, they are flying away. Omkar Specialty is up and about. You have Jindal Worldwide. KPIT, we had the management yesterday. They sounded extremely optimistic about business prospects. That one is up as well. And a few more gainers. Axis Kids, the stock in the last 7 to 8 months is moved from around 100 to around 200 rupees. So that stock is well moving on larger volumes. And Vijaya Diagnostics as well. One of those new listings, it's up close to around 5%. And finally, Finolex Cables as well, looking pretty good. So it's looking good. Festive cheers here and quite a few stocks trading well in the green. Back to you guys.
Okay, thanks a lot for that. Festive cheers here and lots of stocks sitting 52-week highs. We'll get more experts on board. Mitesh Thakkar is joining in. Mitesh, such a befitting day, right? I mean, for us, of course, it's the day before Dhanteras, Diwali, and the market is charging away. So tell us, at this point, 17,640 is here. We're about 5% away from all-time high, or from 52-week highs. What do you trade? What are the stocks that are looking attractive to you now?
Yes, Sonia, I think the markets are participating and giving you a good festive cheer. And I think we maintain that in the short term, 17,750, 17,800 remains the near-term target area. So people who have long positions can trail the stop loss to now about 17,545. And once we cross these levels, there's a good chance that we might head towards 18,100 zones or thereabouts. So I think stay positive, trade with long bias. So right now I have one buy and one sell call. Kotak Bank is something, which is clearly seeing the rub-off effect of maybe Axis Bank numbers, but the chart pattern is very good over here. So buy this with the stop below 1880 for targets of around 1945, 1950 on the upside. And MFSL, I think, is some negative news. Maybe I think the stock is broken down very key support levels. I think they should decline further. Keep a stop at about 695 here and look for targets of around 635, 630 on the downside.
All right, Mitesh, thank you very much for those trades. Well, looking good overall. Commodities, but what's the action there? Manisha is here to run us through what's top of mind as far as commodities go today. Manisha, hi, good morning.
Morning, Prashant. Thank you so much for that. Well, we are looking at somewhat to somewhat commodity prices right now. Remember, it has been a very volatile day. Rupee depreciation to COVID, to war, to gas crisis in Europe. There is just so much that the markets have had to deal with. I'm starting with energy prices on what they have done somewhat to somewhat. Starting with the crude oil prices, and they have managed to be in the positive. More Brent than WTI, as you can see. 8% of gains in the last 1 year is what we've seen. But the better gains clearly have been seen in case of the product prices here. So while the US gas prices are just about a percentage point higher, it is the Europe and the UK gas prices which are still in triple-digit percentage gains in last 1 year. And better off gains, as you can see, coming in for heating oil and the coal, which is clearly 71% up on the higher side. There has been so much that has been spoken and done on coal. We still are trading much on the higher side there. This is the precious metal prices, and this is a very interesting chart here because when you look at the international markets, we have seen a decline come in for gold and silver prices. So while COMEX gold is down 9% because of the rupee depreciation, the Indian gold prices are up by nearly 4%. Same is the case with silver as well. So while the international silver prices are down 24%, we are down just about by 11% here. Platinum down 12%. Palladium also has seen a sharp decline by nearly 9% in the last 1 year. Industrial metals have had a very, very volatile year. All-time highs in copper and aluminum is what we did in the month of March and April. But from those kind of highs, we're down by 35 to 40%. On an year-on-year basis, we're down 24 to 23% for both of these commodities. Zinc has declined less by nearly 13%, but it has been sharper declines for the ferrous metal prices as well, down between 18 to 25%. The lone positive move that we've seen in case of metals has been in case of nickel, up by nearly 10% onto that one there. The agriculture commodities should come up on your screens as well because we have seen food inflation come in, various concerns about supply chains in the international markets. Here as well, when you look at the rice prices, this has been the best gainer really in the last 1 year, 21% gains there. Corn is up by 27%, soybean up 13%, wheat is up 12% as well, and we have seen various policy measures coming in for many of these commodities, not just in India, but the other international markets as well. And that is where the gains clearly end, because all other agriculture commodities have seen a decline. Palm oil has been down by 17%, coffee is down 6% in last 1 year, sugar is down 3%. Cotton and rubber, the industrial agriculture commodities, actually have given up a lot of gains. We saw all-time highs in cotton in this year, but we are closing the somewhat nearly 28% down. And rubber, the industrial commodities, hasn't had many takers, 28% down in last somewhat for this one as well.
All right, despite all that coffee consumption, coffee still down. And industrial commodities as well. Manisha, thank you very much for that. Sonia?
Yeah, I was just going to say, Manisha was pointing out how gold is down about 4% between last Samvat and now, right? So glad I didn't buy gold last Diwali.
Diamond, right, Sonia?
Equities, guys, equities. That's the place to be.
Imagine that, Sonia, equities. That's the way, yeah? Sonia, she doesn't mind sacrificing gold. I mean,
who cares a few percentage point returns,
Oh my
right?
God. Okay, look what we have here. We have an entire team joining us now.
I think our team is, we've been wishing all of you a very happy Diwali from the entire team. So we decided why not have the actual team who does all the work. By the way, we just show up in the morning.
we just show up, and this is that entire team of, oh, look at that. Researchers, producers, the guest team, the guys who do all the work, and we just sit here.
I think you should do a countdown to Happy Diwali, Sonia. I mean, you know, let all of you, I mean, everyone should wish.
Okay, guys, on the count of three, right?
Yeah, exactly.
3, 2, 1. Happy Diwali! And thank you to all of you. Look at them, they're all bright and chirpy, right?
Absolutely. I think we should be dressed like this every day. Or is that asking me too much?
Prashant is pushing it down.
None of them are wearing mics, or else I would have called them, one by one to give us Diwali wishes. But thanks, guys, and thanks to all our viewers. This is the last trading session of this Samvat, so the last Bazaar of this Samvat. We will, of course, be coming back with lots more programming. But for now, it's such a befitting day, right? I mean, guys, the Sensex, Nifty doing so well at a time like this.
It started well. Let's hope that the day ends on this note as well. And, when we started this week, we would be saying from last Diwali to this Diwali, we're down. Now it looks like we're going to be ending flat. So let's hope we keep up the...
Welcome to our Samvat special. Our guest today is Neelkant Mishra, Managing Director, Co-Head Asia Pacific Strategy and India Equity Strategist for Credit Suisse. Actually, no one understands economy and policy and markets and their confluence as well as Neelkant does. So thank you very much, Neelkant, for joining us. Have a great Samvats 2079 yourself.
Thank you, Lata. Thank you for those kind words, and very happy Diwali to you and your team as well.
Thank you. Well, Neelkant, actually, I'm going to ask you a very stale question, perhaps. We know as market anchors, we should not say this time is different. We know as market anchors, we should not say decoupling, because it didn't happen last time. But it looks like that. Our macros are good. Our macros are fine. That's not the case globally. Can you just parse whether we can continue to at least outperform outstandingly?
No, I do think that our macros are different. So there are two levels to that. The first is that the recovery from the pandemic is likely better than had been feared. And therefore, the pace at which the economy is operating right now is better than had been expected even 6 months back. The second is that from a medium-term perspective, there are several drivers of growth which did not exist or were much weaker in the previous cycles. So the most important being that the real estate inventory, the dwelling construction cycle is, I think, improving. I think the Indian participation in goods supply chains globally, there is a market share gain. So in electronics, in chemicals, in maybe even in apparel, in auto components. Now, the reason this matters is that even though the global goods supply chain is currently under a lot of stress, the market share gains are helping offset some of the impact even in the near term. And then you have significant improvements in infrastructure. So road freight is a lot easier to move now. And I think these kind of structural shifts matter a lot when you're thinking about the medium-term growth. But I think this bigger picture, are we going to be able to withstand a substantial global slowdown, is something that we should not overdo, in the sense that we will have an impact of the global goods slowdown. We have already seen that. We will have an impact of the slowdown in capital inflows. Remember that we are still a current account deficit country. So if global capital flows are de-risking, there will be a growth impact on our economy. And also remember that our critical services sector has not yet started to slow down. Remember that US unemployment is still at only 3.5%. And it is reasonable to assume that unemployment there will go up, and that will also be another headwind to the economy. So we need to close our balance of payments deficit. We also will be affected by the interest rates that we have been hiking for the last 4 or 5 months. And so I think the economy will slow from here, right? Okay. The point we make in a note published today is that it is slowing from a much higher level than had been feared, and we should be able to hold on to a 7% growth rate.
Okay. Well, I was coming to those questions as well, your numbers. But before that, we have not adequately parsed the global environment, especially its trend over the last couple of weeks. I mean, 4.6% on the US 2-year. If the risk-free rate gives you 4.6, what is the implication for countries like India?
So in the near term, this means obviously very bad things, especially if you're a capital importer, that the growth that you can sustain, the level of growth that you can sustain then starts to slow down, because you need capital to sustain that growth. And if your balance of payments goes into a very sharp deficit, there is clearly a headwind to growth. But also remember that the strength of the US dollar, not just because of the higher interest rates, is also a sign of de-risking, that people are much more comfortable holding the dollar than any other currency. And there is also, I would say, a very obvious short covering happening on the dollar. Remember, if you borrow in a currency that you are short that currency. So if several $1 trillion of dollar-based debt that exist on companies and individuals' balance sheets, if they panic and start settling them and not rolling them over, it increases the demand for dollars. So there is a cyclical element to this as well, which hopefully in the next 3 to 6 months, as we get more clarity on how the global macro is shaping up, will hopefully start to settle a bit as well.
Okay. Yeah, we are hoping that happens without any accident. UK brought us to the brink of an accident. One hopes policymakers would have learned their lesson and won't let it happen again. But let me come back to the numbers you were mentioning, that you expect GDP to come back to the 7% mark. I did speak to a lot of economists. The RBI is standing at 6.5%, and it is an outlier for FY24. The next best number I have is Morgan Stanley at 6.2, and almost everyone else is a little sub 6. What gives you the confidence? Are you confident of 7 as early as FY24?
No, I meant 7 after the slowdown. We haven't slowed yet. But in my assessment, our current growth rate is closer to 9, and I think if we slow, we'll slow from 9 to possibly 7. I'll tell you what is happening, right? For a forecaster, generally trend is your friend. There is a lot of predictability in how individuals, families, I would say businesses operate, right? So there is a force of habit. There are demographic shifts, like people tend to have babies at a certain age. They tend to retire at a certain age. So there is an element of predictability. And when a trend breaks, so when you see a trend line breaking, the forecasters then get into a lot of uncertainty. There is a challenge in how low are we versus the pre-pandemic path, and also what will be the trend growth after this disruption, right? Because these disruptions tend to disrupt the trend growth as well. And now I think in September quarter, we should be at a level where the base is not meaningfully distorted. Okay. June quarter last year was very, very terrifying.
Very bad, yeah.
But September, even on the CSO's numbers, which on a quarterly basis are actually not very reliable in my view, but on the CSO's numbers, we were about 11% below the pre-pandemic path back in September last year. And that was more or less the level at which they talked about for June 22 as well. Okay. So September should be a quarter where the base is not badly disrupted. So when we looked at a very broad range of indicators, auto sales of various types, rail freight, energy demand, energy demand 3-year CAGR is growing at 7%. Now, there is September 19, if you remember, we had some coal disruptions. Even if you adjust for that, we are well above 4% CAGR on energy demand. And that means the economy is doing well because energy efficiency continues to improve. So I think that the current growth rate is very well higher. Consensus is at 2% CAGR for September quarter. If you do a real measure, and the CSO can keep publishing what they do, but in the markets, people will respond to what companies are doing, and you see banks, right? They're not lending because they are reading the CSO's forecast. They are lending. Their senior management is letting their branch offices lend more because of the data they are seeing. It's so, like
Nilkant, let me stop you there. I take your point entirely that there are problems with the NSO's numbers, and this once I wish that you are right and not the consensus. But I want to drag you back to Samvat and to the markets. How will it mean, earnings will pan out? The numbers I read for Nifty EPS is something like, 870, 815, 820 thereabouts, which is indicating more a 10-11% EPS growth for FY23. What are your numbers and what would you look forward to in FY24 in terms of corporate earnings, whatever measure you want to use?
If I may say so, I don't think FY23 matters other than for the market, that is, other than possibly setting a base for FY24. Because remember that when you're buying the market, or at least when I think about or advise people on whether to buy the market or not, you are buying for at least 12 months, right? You're not, there are people who make money on day trading. I don't think I have that skill. So I would rather look at, if I buy Nifty at 17,000, where will I be on price to earnings 1 year out? And I think that the 1 year out price to earnings is very likely to be sub 17. So as we think about 12-month forward earnings in September, October next year, we'll have half a year of FY24, half a year of FY25. I know it looks really far out and almost unforecastable, but you know what? That is what will drive the market. I mean, how FY24 and 25 earnings move, and I think that the 12-month forward, as we are sitting in September, October next year, will be upwards of 1,000, and therefore, I think that and there is a fair degree of resilience there. So if you see the very early season, early result season right now, but bank earnings are going up.
Absolutely.
And remember that the incremental EPS financials matter a lot.
Yeah, absolutely. Neelkant, since I'm running out of time and I want to get this question in, isn't it time then to buy PSU banks? Would the alpha lie there?
I have some sympathy for that argument. We have been positive PSU banks and overweight PSU banks for a while now, but I'm still apprehensive, and perhaps this is why sometimes age can be a deterrent, of going too far down the quality curve among PSU banks.
Okay.
So we have a few PSU banks in our in the recommended list, and one in our model portfolio. So no, I think that at least the good quality ones we should definitely consider. The ones who are outside the, say, top 2-3 in terms of return on assets and past track record, I would still be a bit cautious on, though, but I can see why some people would find them interesting.
Okay. Well, unfortunately, out of time. Time is never enough when I'm speaking to you. Thank you very much, Neelkant Mishra, for joining us. And I do hope that the 2079 Samvat and the subsequent Samvats are as bright as you are making it out to be. It was a pleasure speaking with you. Have a great Diwali.
You too. Thank you.
Okay, we'll wrap up on Bazaar and trading ideas lined up for you on Chartbusters.